Hey guys, welcome back to another Wyckoff video. This is going to be part 2, talking about distribution. Let's not waste any time and let's just jump right in. So, guys, the act of distribution, similar to accumulation, is basically the institution. It's taking orders from both buy side and sell side. Okay. If you're not familiar with buy side and sell side liquidity, there's lots of videos on YouTube about that. I can start talking a bit more about that in coming videos. But the idea, you guys, you have to understand is you think about situations like this here. Okay. Where everyone sees this as like supply. And all of a sudden, people see this chalk here. And then all of a sudden, price breaks structure again. And then it breaks structure again. They are super confused about what is happening in here. Okay. What we need to understand is what inside of this POI can cause price to reverse. Okay. And in most cases, there's an FVG inside of this price action on a lower time frame. And then there's some sort of unmitigated price. Okay. Sometimes, folks, price even will actually distribute up to take liquidity of the high. Okay, so those are the three different scenarios of when the Wyckoff distribution will start to happen. And what we can do is we can start to look at what is taking place inside of this price action, or as price is even approaching your supply zone. Because as price is approaching the supply zone, Wyckoff distributions typically will start to manifest. Now, that does not mean you're going to see the distribution potentially on the time frame you're looking at. Like if you don't see it in the time frame you're looking at, it probably was there on a lower time frame, because price has to distribute orders in order to start changing direction, right? It's not just going to snap this way. There are a few times, news events and different things like that, that you might get this big wick and it just snaps the other direction. In those situations, folks, you would just, in my opinion, depending on the rules and how you look to trade, is you would just ignore those POIs, or you wait for price then to form new distributions along the way that you can ride in, versus us always guessing, right? The whole point of understanding and learning a distribution schematic is that we don't have to guess. We can start to use schematics or price action, or the way in which price forms, to our advantage. And that's the whole point as being a price action trader. We should not be, in my opinion, putting limit orders here. Now, if that meets your rules and you said to yourself, okay, back testing 100 trades, that, maybe this imbalance here and this chalk represents a good POI and you want to put a limit order, obviously that's completely up to you. But I like to look at price from a confirmation perspective so that I can get in if price indeed is going to go in my direction, versus hoping if my stop loss is here and stop loss is here and all of a sudden price is coming up here and I'm just hoping. I don't like that, right? I like to get in on the confirmation of sellers stepping in. Okay. So if we start to look at this distribution, we start to understand that price is going to start taking liquidity from the low and liquidity from the high, and it's going to distribute across as it reaches into these supply zones. There's going to be different schematics that happen. It's very, very similar, folks, to the accumulation video we went through. All right. And we're going to be talking a bit about these, and I'm going to be showing them examples on the charts of when they take place. And then we're going to be talking a bit about how you can utilize this and learn from these distribution schematics on different time frames. It's important, folks, to be able to switch time frames and see a 15-minute distribution happening actually on the 1 hour, because you can start to actually get a better picture of what price is actually doing, and you can feel very empowered when you look at the charts and you say, oh man, I can see that this is going to be a distribution, or I can see that a distribution is starting to form. This could be a really good POI. Let me monitor this, right? This will give you an empowered sense as a trader, instead of just blindly hoping that you understand where price is going. Okay. So let's get into some examples of what this looks like. Okay, folks. So the first distribution, and this is a pretty classic one. Number one and two are pretty classic distributions. Okay. So what you're going to have is, obviously this would be a sell to buy. So this would be some sort of rally-based rally. So what's typically going to happen, folks, is price is going to come back. It's going to fill this imbalance. All right. And you're going to start to see normal price structure, right? This would be a normal pullback. Okay, so price comes back, makes, retracement to the supply, and then it makes another continuation into the overall demand zone, and then you start to see price go back up. But what takes place sometimes, guys, is price will create relative equal highs here. Okay, and then all of a sudden it retests this new demand, creating a new trend on the lower time frame, and then it just sweeps this liquidity. This could be a wick, right? This is most likely going to be a wick, guys. It's not going to be a candle body close. This is going to be typically a wick, and all of a sudden then what do? We get a retest of supply, and then we break internal structure. This is where phase C and phase D are going to start to create the block flow that we're looking for. This is going to be that buy to sell on a 15-minute or even in the lower time frames, folks. These can be actual drop-based drop order blocks, okay? This will be a drop-based drop order block or some sort of supply zone, and we can look to get in on the lower time frames inside of this supply zone, and we can ride this massive phase D and phase E move to the downside, understanding what has taken place in an overall bigger supply zone, which then distributed its orders and price. This sweep of liquidity, folks, here will be your sign. That will be your UTAD in a Wyckoff distribution. So very similar to the spring that you saw in an accumulation, you would see a UTAD here where it takes one last bit of liquidity and it starts to show you now that sellers are finally stepping into that market. Okay, so that's distribution schematic number 1. Let's go to distribution schematic number 2. Okay, this one is kind of a classic one. This one is typically the one that I see the most, quite frankly. So again, guys, you're going to see your normal refill of this rally-based rally. So price is going to make a pullback, right? And it's going to make a higher high, and it's going to make its internal structural trend. It's going to take its internal liquidity. These can be good sells too, guys. These can be sells on the 15-minute or from a 15-minute POI all the way back down to an unmitigated 15-minute demand zone sometimes. So these can be actually really good sells while the distribution is forming. But then all of a sudden you get a really nice buy that takes this last little bit of liquidity. Okay, so it makes a higher high. And then this is when you have that internal chalk happen. Okay, now this here is going to leave some sort of inducement, right? It's going to leave, there's going to be a drop-based drop or some sort of high that didn't mitigate this supply zone. Price is going to come back up, creating some really nice trendline liquidity, and it's going to come back up and it's going to sweep this inducement, and then it's going to give you your final chalk here. And now it's going to be creating block flow for phase C, D, and E expansion. Okay, these are the areas that you want to be getting into. You can get into here, or you can get into this zone here. This sometimes, guys, is where I get in, and sometimes I even add a position on here. Okay, so if I've really started to see this distribution forming, I'll even get in here off this internal liquidity sweep of this inducement here, and then I'll get into the block flow trade as a secondary entry. All right, so this schematic here is probably the one you'll see the most often. All right, so let's go on to distribution number 3. Okay, this one is one that I think retail traders trade the most. Okay, this one is basically a glorified head and shoulders pattern. Okay, so you're going to start to see, you got your shoulder, you got your head, and then all of a sudden price comes in here and it takes in this overall block flow. Now, some people might mark this as the shoulder. That's fine too, right? But what we're trying to understand, guys, is head and shoulder patterns are simply just a bigger distribution happening of internal structure. So what's taking place is we're starting to create a rally-based rally here. This range, you guys, remember this range, this liquidity sweep, and then this break of structure, this range here is a rally-based rally order block. So when price comes back into it, and then it mitigates this overall liquidity sweep, and it mitigates this supply, and then breaks internal structure, this is not has nothing to do with head and shoulders. It has everything to do with a distribution that's now forming new supply, and we're typically going to have, some sort of fair value gap or unmitigated price action that created a flip zone for this overall buy to sell that has now introduced sellers. Okay, and then we can understand that as price now has some liquidity here, we take it, we retest, and we can get in on phase C and D for our expansion phases of this market. Okay, so this is another one you might see, and you can start to understand why Head and Shoulders actually matter, because a Head and Shoulders or this distribution schematic is starting to warn you that sellers or buyers, depending on what, this could be upside down, obviously, for an inverted Head and Shoulders, but sellers or buyers are coming into the market, in this case, sellers, and we're looking to see where they're going to come back to mitigate. This is what's really important, this act of mitigation, and then we can get in, because we understand that liquidity has now been swept, and we believe that this now is a strong high, and price is now going to be respecting these overall highs, and these would be wicks, folks, in your market structure downtrend. Okay, this is very important, and I guarantee you've seen these happen all the time. You just didn't really understand that these were distribution patterns, and this is how wicks of 15-minute structure are formed. Okay, let's go on to number 4, and this is the final one. Again, this is going to be, you might have seen this one sometimes, but basically this is that trend line liquidity break of the internal trend line, and you're going to just start seeing, guys, constant block flow forming. That's basically what this is. So as price has made some sort of, ascending channel that people like to trade, price is basically creating trend line liquidity, and then all of a sudden it breaks out the trend line, and then you have just beautiful block flow forming, and you can get in. And again, guys, this would be one of those, that price action where price has finally reached into that last unmitigated area to the left, or maybe it's filled the fair value gap. This is where price is starting to warn you ahead of time, folks. This act of this price action right here, all this price action in phase A and B, is your warning sign that this overall price action to the left and supply zone is probably going to give you some sort of distribution, and sometimes, folks, it will just wipe this overall range. Okay, so this liquidity here that's formed, it will do something like this, and then it might just reverse. But that in itself could be a really nice 1 to 3, 1 to 4, 1 to 5 RR trade, or more, depending if you happen to catch a 4-hour one. If you caught a 4-hour mitigation of this trendline liquidity, then you really could have got into a good solid 1 to 20, 1 to 30 RR trade on the 1-minute charts if you saw that taking place. Okay, so with that being said, let's go now look at some examples of this taking place over the last few weeks in raw price action. All right, so this overall price action, folks, is inside of a 15-minute supply zone. Okay, we're on Euro USD 1-minute chart. Right, as you can see, guys, this is kind of that stuff that I was talking about, right? We have a rally-based rally. We have an imbalanced market that made an impulse. What does price do? Phase A. It comes back to mitigate the rally-based rally. We then make another high, okay? And all of a sudden then price breaks structure. So it takes out this overall internal structure. We rebalance the market with this demand zone, and then we make an equal high. Price comes back up. It doesn't really clear out this liquidity. It creates relative equal highs. It retests this new demand. And then all of a sudden, what does price do? Price comes back up for that last liquidity sweep and probably the fill of some sort of fair value gap or whatever was inside this 15-minute supply. And then we have beautiful block flow happening as price now expands down or distributes down into and taking all of this internal liquidity. Okay, you can see here clearly, right? This is a demand, this is a supply, right? Price does not break this wick, then all of a sudden what does price do? It starts breaking internal structure. It holds this. This would be a wick on a 2-minute chart. This would be a wick. This would be a wick. This would be a wick. So price is now holding, guys, these overall order blocks, right? You can see this buy to sell, okay? And then all of a sudden we have what? Another buy to sell. And then we have another buy to sell. So all of these order blocks are being held. Now, what takes place? Price even holds flip zones, right? There's a fair value gap here. That got filled by 50%. There's a lot of warning signs, folks, inside of this overall phase C and phase D of where price might be headed and how you can understand then this is all just liquidity, okay? and then eventually price will accumulate, and then it might come back up to fill this part, because that's how the Forex market works. It's constantly distributing for buy side liquidity, and it's accumulating for sell side liquidity. Okay, that is how the Forex market works, and we can get into these views beautifully for the run on liquidity. All right, so let's go to another example here. Now this example, folks, is actually, I'm first going to show you how this looks on the 1 hour chart. And this is where I want you guys to be studying. Okay, if you're learning this concept, is how does a distribution look on a time frame that I'm trading? For instance, this is the 1 hour chart. This actually is a 1 hour supply, and we have a 1 hour schematic, a distribution schematic. Now, I'm sorry, it might be a little confusing that I have these extra bars here. Those delineate the phases, okay? And what we need to understand, though, guys, is how price, right, when it breaks this and it takes out this overall wick here and this overall demand, and then it comes back up with this wick sweeping this liquidity, and then it breaks this structure again. These order blocks here, folks, are where you need to be getting in on phase C. Now, inside of this price action, guys, we're going to dive into this on the 15-minute, because what did I tell you? That you can actually see distribution schematics on the time frame you're looking at. But most times it's way clearer if you go down a few time frames, because you get to see the internal structure. Okay, so if we go now to the 15-minute chart, this is actually what that 1 hour distribution look like. We have our normal, you can see this is our normal trending market. We have kind of our first sign of weakness here, right? Price actually breaks out of this and takes this internal liquidity, right? What does price do? It actually respects this wick. Now, these trades, folks, can actually be good trades in themselves, because this here is actually a 1 minute Wyckoff distribution. You can see we took the liquidity, we rebalanced the market, and then we dropped. So there was actually a distribution on the 1 minute inside of this overall supply zone. So we can actually get into these trades and be very profitable just trading this, and price comes back down to rebalance. There's no wicks here. So you can see that price came back down to rebalance this demand that was left behind. Now, what's interesting though is how, what did I say before? These acts of price now coming back up to take this high should be your warning sign that you might be in a distribution pattern forming for this overall supply. Okay? So then all of a sudden, what does price do? It takes its last little bit of liquidity, this sell to buy that caused the overall demand for this high gets retested. This can actually be another interesting buy, right? It can be another interesting buy on the 1 second, 15-second. These are POIs that we use in the mentorship group to get into really nice lower time frame trades, understanding how supply and demand zones of internal structures formed, okay? But as you can see here, what does price eventually do? It holds this overall supply zone. We break now new structure, and then this buy to sell is actually that bigger, higher time frame 1 hour order block. So this became that 1 hour order block. And then as you can see, we have a fair value gap, price comes in, fills it by 50%. We have an order flow change on the 15-minute, and boom, away price goes. These can be good trades. Now, me personally, I'd be trying to get in here on the phase C, and then this might be an additional add-on trade in phase D and E for a really nice, maybe 1 to 15, 20 RR trade, because guys, our stop losses, they would be pretty tiny. They would be about a 2 to 3 pip stop loss. And then on this OFC, we'd probably be catching a 2 to 3 pip stop loss, and all of a sudden we're getting, 1 to 15 RR trade with both these positions running, as we understand the price is going to now take liquidity to the downside. All right, let's go into another example here. This is a 4-hour example. So what I wanted to do is start by showing you guys that how supply and demand formulate these sorts of distributions. Okay, so as you can see, all these beautiful order blocks, all these beautiful buy to sells, folks, these are all POIs. These are POIs we use on a daily basis to be able to get into pro trend or potentially counter trend. However you want to look at it, order flow changes, buying, that sort of thing. But look at how this weekly supply now starts to show us a overall Wyckoff distribution. Now you would look at this and you would not really see a distribution here, right? There's nothing about this overall price action that makes any sense. So we have to go a time frame lower, right? We have to go a time frame lower. So let's go into the 4-hour chart. But what do we start to see? Price came into that weekly supply, and then what do we have, right? This is that sell to buy, okay? So there's demand there. So what does price do? It comes back up, giving some internal liquidity. It wipes that internal liquidity, and now we have a beautiful trending market here, guys. This is all block flow, all trending 4-hour market to make a new high. Then all of a sudden, price breaks internal structure. We have trend line liquidity, and we have a fair value gap here that's not mitigated. Okay, price breaks now, multiple levels of price, right? We have internal break and external break. Okay, then all of a sudden, price comes all the way back up, sweeping this liquidity. Now, this here in this instance is the UTAD. Price fails to run this overall high, and for some people, maybe they look at this as a head and shoulders, right? Maybe this is your shoulder, head, shoulder, but the reality is it's all based on structure, and we now have this overall supply zone up here, and then we can look into phase C, right? So we have our order flow shift, we have new supply, so we could be shorting that market. Now, price in this instance, folks, comes up one last time. This does not always happen, but it can. It comes up one last time, and it actually just fills this little buy to sell that was left over. Okay, so this overall fair value gap, it tried to fill it by 50%, but then it came back one last time up here. Okay, and price doesn't always do that, so we don't look at that as like something we trade off of. I would be certainly trading just this order block here, and sometimes price will take you out, and then you can re-enter. You have to look at how that's going to form. But remember, this is the 4-hour chart, folks. So if you saw this overall schematic forming, you see this liquidity, and we see this fair value gap, and we see this order flow, and we see this supply. Selling this supply all the way down to this demand is a massive move on the 1-minute chart. That is a massive move. So for you guys who are trading overall, maybe you're not sitting here because this schematic, guys, this actually took a few days. You can see this overall schematic, guys, it went from, it was actually a month, right? It went from the middle here all the way to the middle of June. So this is where people who trade Wyckoff, they tend to, on a higher time frame, they tend to actually have a lot of patience because they wait for days and days and days for the UTAD, and then they wait for confirmation, then they wait for more confirmation, right? So you have to remember that as lower time frame traders, we can actually be trading while price is doing this overall schematic. But what I'm trying to get you guys to understand is how these schematics form so that you can see them and you can understand what potentially is taking place. And then you can use these areas of confirmation, right? We have a fair value gap. We could have been buying off here. We can see that we have an unmitigated supply zone. We could be selling off here, right? There's ways in which we can trade these from an intraday perspective, and we don't personally have to wait for this overall month and this overall schematic to form. We can actually understand that it is forming, and then we can look to trade our POIs inside of this price action on an intraday perspective. Okay, so with that being said, I hope that this video has been a bit helpful on understanding a bit more of the structure-based Wyckoff and how you don't need to necessarily understand all the nuanced labeling and all the intrinsic details of an overall Wyckoff, and we can just start to understand how structure is forming and then how this is an overall range. And this range, guys, ranges are typically schematics. Ranges are typically those Wyckoff distributions or accumulations. That's why internal rally-based rallies, like I've taught you guys, are overall demand zones. And you can see this at a fair value gap, and we had a demand zone below it, and so price decided to rally away from that. And we can dive into this price action and we can see different schematics that are forming, and it's why here price came up and then fell off here, because these overall drop-based drops, I'm going to be getting into these in the next segment of Wyckoff. These are what's called redistribution and reaccumulation areas, and then we can actually look at how price now rallies away from these areas, and we can have more confirmation of these sorts of trading opportunities. All right, so I hope this video has been helpful, and we'll see you on the next one.